All right. Well, we are back. It's another Tuesday. It's a wonderful time to be here. I'm calling in today from Utah. We have several panelists from Florida, Missouri, Kansas, even some individuals from Colombia, and one amazing accountant advisor from Georgia. So I'm sure we'll have others trickle in as we get started and get going throughout the meeting today. The reason and purpose behind what we collaboratively do here is we're trying to implement best practices throughout the industries that serve our clients the most, namely that of legal, accounting, or tax, as well as financial, and all things money and wealth related. So what are some of the common pitfalls that clients fall into? What are some of the strategies that they don't know that they're eligible for? There's a lot of things out there for the business owners that they may not be a Fortune 500 company, but they might be able to do Fortune 500 strategies, even though they're only in the $1 million range of revenue. That could still be a thing, should they understand and know who the providers are of those strategies that tailor to their income levels, which they do exist. And so we like to, here at this table, talk about clients, oftentimes redacting their names. We're talking about their situations, what did work, what did not work, so that other professionals who come and attend this webinar and this seminar, they can glean from us and our experiences what can work best for them and their clients. As well as occasionally, there's this network where people might relate more to Melvin, and so then they send Melvin their clients or what have you, right? And so depending on what we do or what we don't do, we play well with other professionals, and we know and understand when it makes sense to do the work ourselves and get some help versus send a client somewhere where they can get the very best service. Anyway, with that being said, just some quick introductions. I think we have today with us someone who usually watches on Facebook now is here in the Zoom meeting, Tina Allen. Can you briefly introduce yourself and tell everybody how we met?
Hi, I'm Tina Allen. I'm in the greater Orlando area, and I've been doing tax and accounting for about 38 years now. Started when I was 16. I had a good high school teacher that I understood the debits and credits, and went through college, and I really don't know how to do anything else. But I am getting ready to turn 57 next month. So I'm wanting to work for the next 10 years, and I've got a bookkeeping staff that does very well. I'm a small firm. I'm up to about $250,000 of revenue per year, but I have bookkeeping clients that we just AC every week, and I do more of the audits and tax strategy. And what I'm looking for right now is I have a lot of clients that I have had to literally strangle. They are young entrepreneurs that have secret sauce in their industry, and to try and even get them to take a paycheck was a really hard thing. And now they've gotten where they've got a lot of profits, and a lot of tax liability, and using some advanced tax strategies, but they need benefit programs. So I'm trying to figure a way out to kind of cookie cutter, life, health, 401k. A lot of them have kids in private school or childcare, and put together some type of benefit program that I could, cookie cut for each one. But I also I'm interested in making residual income off of these opportunities, because I also have my real estate license. I make residual off that, and a few other things. So that's kind of what I do. And I met Jake through another business group, and he has helped several of my clients save. In fact, one of them is probably getting an $880,000, if not more, income tax refund this year due to Jake.
Very nice. Well, I appreciate that little, how would you say that? That little applause that you gave me. I appreciate that very much.
Well, I just kind of said the end of the year was a last minute thing, and we were trying to push this guy into something, and he just wouldn't budge. And then all of a sudden he budged, and we worked our butts off. And it was just like, I'm just like, Jake, what can we do? We've got, I know you've got a package of things, and I know about them, but I don't know how to implement them. So, and I'm not licensed either. So a lot of the strategies that we have to have someone who's licensed to do that thing. and I don't know who those people are. I could probably find someone local, but I'd rather have someone who is really, you know, in the tax and wealth management arena, where we can help each other and, you know, feed off of each other for the same purposes, rather than just, you know, whoever's in my, you know, business networking group.
Absolutely. Well, and in addition to that, here we have some individuals who actually belong to my team. We have Melvin and we have Shane that just joined just now. And Melvin is actually a recovering CPA. He is getting a financial designation, or he's pursuing one. And so he is very interested in all things financial. And we are turning him into what I call a strategic advisor, because at some point, whatever our backgrounds and our titles, and, you know, whether we're an attorney or whatever it is, right? Sometimes we have to kind of get rid of that educational history. And Tina, you're a great example of this, in the sense that you get real with your clients, and you help them based on their scenario today, what they need to do. You know that there are things out there. Sometimes you don't always know what it is that they need, but you help quarterback that service. And that's largely what Melvin's been doing here of late. Melvin and Shane both.
I yell at my clients a lot.
Well, and every client needs a little bit of financial psychology, and sometimes that comes
strong arm.
That comes in the form of a little bit of push and shove and verbal threats, right? Just
I don't threaten them. I just say, you know, you're gonna pay. So, you know, thanks for calling. You didn't have to. I mean, I have 3 more clients that have sold properties and netted over $1 million of gains, and did not call me ahead of time, and I could have gotten them in deferred sales trust. And I'm screaming at them. Why didn't you call me? This is something you pick up the phone and call your CPA about. You know, it's too late. You've touched the money. So now you're gonna have to have Jake get them into some minerals and oil and gas here. Try and save the situation.
Well, just high level, without, you know, mentioning the client's name, the one that we were able to swoop in very last minute at the very end of the year and implement some strategies for. Can you give the client's scenario, the industry, what they do for a living, and what their income was like, and how it is that we saved them $800 and something thousand?
It was a husband-wife couple. They owned a construction service business down here in Florida for many, many years. He's a multimillionaire. And they had decided that they were going to move to Tennessee, and the business is kind of running itself. He actually is someone who I'm, you know, kind of mentoring a little bit behind as far as how to run a business. And he gave me a couple books. I can't remember what they are right now. Let me turn that off. And so anyways, he was approached by a national company, and he is not my client, because although he knows me and he knows who I am, I'm just this, you know, girl that sits in her office at home and stays by herself. I'm not like a real accounting professional. You know, those are the downtown guys, and I go to fight with them constantly. And you know, and I've worked for some of them along the years. But so he was approached about selling his business for $6 million. And he literally has, like, you know, he's owned it for so long, there's no basis in it. And a large Chicago company that does this put together some, you know, pro formas about, you know, that how it was going to work and all this. And so he closed in July and didn't tell me. And he knew that I had some of the stuff. And I literally jumped up and down and screamed at him and said, why did you tell me that? Because his estimated tax liability was 1.2 million. And he did operate the company from January through July or so. So that's going to be a profit of, you know, he's used to paying hundreds of thousands of dollars of tax. And because his CPAs downtown are so great, you know. So, you know, I was like, you know, you wouldn't have had to pay any money on that. So, you know, he did not have the, I guess, respect of me to do this. And so I started nagging him around the holidays, Thanksgiving, saying, you know, we need to offset that and we need to work on it. And I started getting him with Jake on a Zoom call, and we talked about it. And then literally the last week I was like, are you going to just, you know, mean, should we have a burn pile in the back with your 1.2 million? Because I can use 1.2 million. I mean, you can buy my house off for 1.2 million if you're going to throw it away, because that's what you're doing. And finally got him in with Jake, and I think he bought about $700-something thousand minerals. And he did pay some estimated tax plus some W-2, but right now I still don't have the things from the great downtown CPAs. But right now I have them estimated about an $880,000 refund. So when I do get the K1s from the operating entity and the sale, then you'd think that they would be done already. And then I've had him also on with two young. I mean, these guys are still having babies, Ryan and Brandon, and they're kind of in the telemarketing business, but then they branched off into construction and some other things. And through tax savings, they have been able to reinvest and make more money and make more money. And now they're getting into, I just did a pro forma for Ryan, and all his companies together, his gross sales were $11 million. And this is a 36-year-old kid.
Yeah. So let me introduce Shane Kelly just real fast.
Okay.
So everything that you're talking about here, it's laying the background for how we like to operate and work. When I say we, from a best practices standpoint, sometimes there's financial advisors on the call that are not members of the firm, so to speak, but there are other people that come in and they want to learn how to do these same strategies and everything else. But today we're fortunate to have a slew of individuals who work at AlPhi. Al is in like the bird Al, Phi is in finance, out of Lenexa, Kansas. So I have to say Lenexa, Kansas, because I'm in Utah, but I'm an owner of the firm there in Kansas, right? And we have an opportunity here because everything that you're talking about, everything that you're mentioning, and you called me up right before this Zoom meeting that we are on right now. And a lot of it is what we help other people do. We work very close with their most trusted advisor, which, in this circumstance is you, Tina. But Shane is very apt and capable with what we call a retirement analyzer. We like to really understand the goals and objectives of all of these clients. Sitting down with their accountant and their tax advisor, such as yourself or Melvin or somebody else, they're going to review and understand the potential tax savings of implementing strategies now and this year. But then, especially with the volatile market that we have today, it's also important not just to put money in the market in some kind of tax shelter, deferred or exempt vehicle, what have you, but that there's somebody behind the helm of that can really drive or guide those investments into the future based on what your needs are today. I was on a meeting with somebody this morning, and their voiced goals and objectives were, I want to sell off into the sunset and not worry about all of the volatility. I want to be able to have the rates of return, but I need somebody else who will worry about it for me on my behalf so that I don't have to. And that's literally what a lot of our clients say about us. They might see everything on the news and everything else, but they know that we worry about it sufficiently enough, more so that they don't have to. Shane, do you want to maybe touch on that a little bit and the journey that you take a client through before we ever invest $1 of their money?
Yeah, great segue. What we do is we talk about and bring in a client, and we try to understand what their needs are long term. We're trying to understand where they're at and where they want to go. So we'll get some of their financial information. We'll look for their strengths in what's currently going on in their plan, in their lives, and what are some opportunities and maybe some of the threats that are in there as well. And then once we gather some information, we sit down, we plug all this information into our retirement analyzer software, which is very robust. And we can turn around and then start creating scenarios. And what I usually do is build one scenario as a baseline, right? This is where we're starting at. And then I just make one slight change, and then I build a new scenario and just implement that one little change. And then I build another scenario on top of that one with another additional change. And I'll do this, depending on the client, 4 or 5 times so they can see this is where you're at. This is how your retirement looks like with the current setup that you have. And if we were to implement some of the plans that we have for you, some of the different products like DSTs and things like this is what it could affect. And these are how the numbers would change in your retirement. And I think giving people a 30,000 foot view of how their retirement can change radically with just a few little tweaks here and there gives people a lot of confidence to see that that we can help them make really good decisions as they're moving forward in their life. And again, none of this is set in stone. We can add it and we can change it all the time. And I think that's the other real great part about the planning process is that they can see how valuable a tool that can be in their life.
Another item is that we're incredibly transparent about fees. And this brings me to a story from yesterday. I had a client. They're selling a $2.5 million piece of real estate and they purchased it for around, just under 1.5. So they got about $1 million gain. And that means that they're going to pay, $200,000 or so in capital gains, plus another 3.8% for the Obama tax, and then state tax, or they would, but we're going to implement the deferred sales trust and we're going to help them out. However, there's something else that's throwing a little wrench into the mix here. They have a mortgage over basis issue. So they originally purchased it for X, but then they took out like a second mortgage against it. And the payoff would pay off the debt in such a way that it would pay back all paid in capital or pay back all of the basis, plus an additional economic benefit of debt that would be paid off. That's called boot. And this mortgage over basis would be taxable to them at ordinary income rates. There would be roughly a $266,000 ordinary income adjustment should this property get paid off. So not only would they have, if they didn't do anything, the around $280,000 of tax on the gains, but there'd be an additional tax on $266,000 of ordinary income. And that would be a surprise. That was a surprise to them. They had not considered that. Their accountant hadn't advised them on that. However, the strategy that we're implementing is a multi-front strategy where we have access to Delaware statutory trust funds that are 1031 eligible. Now, of course, if I were looking at it from my own income standpoint, I would probably just do a 1031 for all of it, because I would get 6.25% off of all of the equity that would move over. That would be a good payday for me, right? However, what's in the client's best interest, this is the same client that said that, hey, I want to be able to sell off into the sunset and just kind of retire. My objectives are income in nature. I need income from this. And if we just roll it over into a Delaware statutory trust fund that is accepting of the equity, is accepting of the debt, and would be accepting of the debt over basis, it may or may not have all of those features to provide the income for them. A lot of times, these types of funds are income in nature, or they allow you to roll over the debt. And sometimes a mixture of the two, but then your income goes down in order to accept the debt feature. And it would be actually rather difficult to provide them with the additional flexibility that they've also expressed that, hey, should we need to help out one of our kids financially, we want to be able to have access to a large chunk of money. And if they roll things over into a 1031 eligible Delaware statutory trust fund, that is an illiquid asset that they should not lock up the bulk majority of their assets into. So one, it wouldn't be suitable. Two, even though it'd pay me more, it's not in the client's best interest from a liquidity standpoint. So very transparently, we show them that with the deferred sales trust on the first $1 million, you pay the attorneys 1.5%. You pay the trustee somewhere around 85 basis points. And then, of course, the financial advisor, depending on the sophistication of what is needed or required, you'll pay 1 to 1.5% to the financial advisor annually, divided by 12 in arrears. So that means after each month, based on the performance of the advisor, they get paid. And that ends up being dramatically less than 6.5% all up front and immediate. Now, what we ended up doing and structuring for this client, and we're waiting for the close and everything else to happen, but what's set up right now is $58,919 of equity to offset the otherwise ordinary income adjustment, which would be the mortgage over basis issue. So to offset the $266,000, he has to put in $58,919 into this Delaware statutory trust fund. That will then take all the debt, because that little equity piece and the rest of it, debt, can move into that. It's an illiquid investment. It only took a portion of his $2.5 million sale. And now we're able to offset that ordinary income tax that would have happened. And with the deferred sales trust, we can offset all of the capital gains tax that would have happened, plus the Obama tax. at the end of the day, what would have otherwise been a very large taxable transaction for this individual ends up being a zero taxable transaction. He only is going to pay taxes on the money he takes as a distribution from the flexible vehicle, which is the deferred sales trust. And they can take the monthly income as scheduled, or they can take large one-time transactions should they need to help out one of their children who may be in need in the future. And so what we try to do here, and the reason I share this story, is we try to provide solutions to people's financial problems. Now, a financial problem is sometimes caused by something really good. And it might be a great time to sell real estate because the really good thing is that the price is right. It might be the time to sell, but it may not be the time to pay the taxes. And if we can help people be in control of when and how they pay taxes, then it gives all the rest of their advisors ample time and opportunity to then plan down the road with other strategies how to offset that when it is incurred, because now we've put the control of timing back in the hands of our clients. So that is kind of like my deal story of the week, and that happened just yesterday, and that was kind of fun. I don't know if that story, Melvin or Mark or Shane or Tina, if you have any comments or questions about that scenario, that case, that client, or maybe something similar that you're looking at right now.
I'll just say that that's exactly what I'm all about, is putting the control of the tax payment and what tax they do owe to the IRS or the Washington back in the, so that it's not out of their control and it's in, their control, and for us to find ways to defer their, tax or reduce their tax so they can invest it in something else like their retirement or their kids or another investment, so that the tax is not paid, to the IRS, and that they have a way that they can either hold or, make decisions to do if they do want to have it, if they do have a taxable event. That's, something we can plan for and we can do strategically at some other point, and possibly at a different tax rate than what they end up, getting thrown on our lap because we're doing taxes after the fact. And we can't do anything about something that happened last year, except for a few things. But when we know that something's going on and we're in constant communication mid-year with them and knowing what's going on with them, we can constantly have these vehicles that they can move into, that where we can reduce the tax liability for this year and also save them money so that they can do other things with it to build more equity. And I have watched so many of my clients become filthy rich because of tax savings that I've saved them over the years. And they've reinvested in their businesses and reinvested in other things, and they have become filthy rich millionaires. But, Tina has not. So, so that is exactly what I think. Yeah. Everything I'm all about. And that's my pitch, to everybody.
You're touching on a very good point. Let me tell you what I see in today's demographics, in today's society. So we've had this COVID thing, right? Something that nobody ever would have believed that there would be a pandemic like this again. There's this war in Russia and Ukraine and everything else. There's a lot of new nuances, not just, travel restrictions, but countries that are forming alliances, countries that are getting new presidents, that have different points of view, different ideology when it comes to businesses and taxes and everything of that nature. And whereas before, I think a lot of people were more of a do-it-yourselfer, and then they would just bring something like almost pre-made to their tax account, what have you, and say, file this. People aren't looking just for the transactional work anymore. They're looking for the advice, and they're having a hard time getting it. So I sometimes compare this to people going shopping, and at the end of the day, they've done all of their own purchases, or they've put everything in the shopping cart that they knew that they needed and they wanted. And then they go up to the cashier, and the cashier is kind of like the accountant who just tallies it all up and gives them their receipt, right? That is like the old traditional way of doing things. I mean, you should know enough on your own to manage your own business, and you need to do it all yourself. You need to pull all the goods and everything off the shelves yourself, right? That no longer is what people want. People are looking for that store manager. People are looking for that individual that can hold their hand and walk them down the aisle and say, hey, we have these new products. Here are the generics. Here are the name brand. and here are the discounts, and today only you've got this that's available. They're looking for somebody that'll give them that timely advice of what will make a big difference in their purchases and in their business today, and then to sit down with them or to walk them through the cashier line and to actually speak to the cashier, make sure that the cashier is entering in things the correct way. Oh, by the way, this one is on discount today, or this one is name brand, but it's a manager special or whatever, right? So that's the type of strategic advisor service that people are looking for and are not easily finding that service today. More and more, I had a client who said that my accountant, he retired, but he handed me off to another member in his firm, and I just don't feel like they care about me as much as the old guy did, right? And that's because a lot of times the financial incentive isn't there. If you look at how a lot of these other professionals are being paid, it might be a commission for a product, it might be a fee for a service, or it might be, again, a transactional thing like filing a tax return. If you look at their profit and loss and see where they're making their money, then you know what they're going to do for you, what they're good at. But if you're looking for somebody who offers something different than where they make the main part of their money, I hear this all the time from Brett Swartz and other people I do business with, it might be time to level up your advisors. And it doesn't mean you have to get rid of the other people, but you might need, if you've been moving up, if you started your business 20 years ago, and from 20 years ago to now, it's changed by tenfold, then the people that helped you get it started might not be the same people that can then help you over the next 10 years do another 10 or 20 fold. And those types of people might be a little bit different than the transactional in nature people. They might be the advice oriented and strategy people that in certain income levels, once you start getting above $1 million or even over $500,000, there are certain strategies that you maybe didn't make financial sense before that now do, that you should be implementing to help your business how did I put it? Before this call and before I talked to you, Tina, I was talking to an individual about how essentially with your tax savings, we can fund your retirement. So with the dollars that you would have otherwise spent in taxes, we're going to fund their retirement, and we're going to also set up an emergency fund for their business. And that's money that they otherwise would have sent to the government that they didn't necessarily need to because they didn't know they weren't already doing it. But now that they know, they are super excited, and they keep asking me all these questions about how they can do more. And of course, we look at cash flow and we look at what they're able to do, and we try to be very conservative. We don't want them to be so retirement rich that they're everyday poor. You know what I mean? So there's the advice that we need to be giving clients for the long term, and not just for today, but helping them see what they can do today so that they don't have to needlessly overpay the government. That was me on my little pedestal giving a preach, wasn't it? Mark, I don't know if you have any comments on that or on the deal story of the week.
Exactly what we're looking for. Trying to work with people in the transition planning to bring the qualify in early and make sure that they understand the steps in advance so that they'll be ready to do it when the transactions happen. So I love it. And I agree with everything you're doing.
Well, and one more thing that I throw out is that sometimes clients need things that aren't what we do. We had a client the other day that has a lot of cash-centric businesses in 40 different locations. And these cash-centric businesses, sometimes that can be difficult just for banking. I mean, how do you handle a whole bunch of cash, especially if you don't have like the most professional appearance? Like maybe you might just be tattooed from head to toe, and you might be a really big guy, and you might be carrying a duffel bag full of money into a bank, and they might be scared and maybe they don't want to talk to you. All right. So we had an experience like that with a client where literally we had to walk in the bank with the client. And now you've got a strategic advisor, somebody professional, shirt and tie, with this individual, presenting this individual as a business owner. And we got a completely different experience for the client than that they were having otherwise, and helped overcome some of their banking issues and troubles. But that's not something that a financial advisor or CPA, that's not something that's normal, right? But sometimes we can identify where their stumbling blocks are if we really care about the client. And we can either present them with somebody that can help them there, or we can step in and do something not typical, but something that we can do that can make a big difference for our clients, right? And again, at the end of the day, it's all about figuring out what the best solution is and being real with the client. And again, that's another thing that I applaud Tina for, because she's always incredibly real, to the point that she almost slaps around her clients to make sure that they don't forget to do things. Otherwise, they're going to pay a whole bunch of money in taxes. And sometimes that's what people need. I think these young 30-something, 20-something guys that are making millions of dollars, I think they pay Tina so that she will smack them around when they're making dumb decisions. And sometimes that's what people need. So today we're going to end just a little bit early, because I have a rather big client that I need to jump on the phone with a little bit before the end of the hour. And that's okay. We've been able to address a few questions here today. And let me just make sure that I've answered everything that's coming across on Facebook. So far, we're doing good. I've been able to hit 2 birds with 1 stone with that question. And from the group and the panel here that we have today on Zoom, we didn't go over lots of strategies today. Mostly, we talked about a few deal stories, because we like people to be able to relate with what we've done successfully for other clients and how they can also do that as well. Tina talked a little bit about the mineral strategy. Next Tuesday, we're going to go more in depth into the mineral strategy, how that works, what it is, how clients can participate, when it makes sense, when it doesn't. And essentially, that's a charitable strategy that can provide clients with a much bigger deduction against AGI than they would normally get if they just used a donor advised fund or something different. So come back next week. We'll see you here next Tuesday. I believe the time. What time is it, Mark, in Kansas?
It's 1:41.
So we start at 1 o'clock Central Time, 12 o'clock Mountain Time, which would be 11 o'clock Pacific Time, and Tina, 2 o'clock in Eastern Time. Man, if we don't get that confused, I don't know what we'll do. But thanks again, everybody, for participating. Thank you for your questions. And of course, throughout the week, if you want me to prepare something specific to a client example of yours, shoot me an email, shoot me a message or a text, and we'll go from there. We'll touch on it and give it attention. Thanks again, everyone.
Thank you.
All right. Bye-bye now.
Bye.
Thank you.